Hello everyone, welcome to Money Control's Ideas to Profit. Today we are discussing about the Q3 earnings review of UltraTech Cement, which is the leader in the cement industry. Well, the company came in with a mixed set of numbers for the quarter gone by. The top line grew by around 18%, whereas the margin witnessed a contraction both on a sequential as well as on a year-on-year basis. Talking about the key highlights of the results, the company witnessed a revenue growth of 18%, which was primarily driven by the volumes. The volumes for the quarter came in at 18 million tons compared to 15.9 million tons in the corresponding quarter last year, which translates to a volume growth of around 13%. Well, this was primarily aided by the consolidation for 40 days of Binani Cement assets, which added an additional volumes of around 1 million tons. Excluding for that, the volumes for the quarter came in at 7%, which was fairly in line with the industry standards. Well, in terms of the realizations, the price trend continued to remain muted for the most part of the quarter, and therefore the company witnessed the decline in realizations on a sequential basis. Well, the silver lining in the result was the cost price pressures abating. The petcoke prices, the fuel prices, as well as the coal prices have started trending downwards, and which should really support the margins of the company in the coming quarters. The other factor which impacted the Q3 performance of the company was the maintenance shutdown. The company undertook an 11 kiln maintenance shutdown, which added an additional cost of 80 rupees per ton, aggregated to a total amount of 145 crores, which really had an additional cost and impacted the margins of the company in the quarter gone by. Well, talking about the stock outlook, the company is a market leader in the cement industry, and they have been consolidating their market presence through a number of acquisitions in the last 12 to 18 months. They've done 3 big ticket acquisitions: JP Associate Cement Assets, Century Textile Cement Assets, as well as the Binani Cement. So all these 3 acquisitions have a very high cost structure compared to UltraTech's capabilities. So the acquisition synergies should start coming in and kicking in from the next 12 to 18 months, which should really support the margins as well as the volumes of the company in coming quarters. Well, on an aggregate basis, the cement sector has a capacity of around 480 million tons, which is operating at a capacity utilization of 70%. So the players in the industry are more focusing on volumes at this point of time, and which keeps the competitive intensity at elevated levels in the near term. Well, in terms of the demand outlook, we have the uncertainty regarding the elections period. So the new corporate capex is being stalled at this point of time, and therefore the price trend continues to remain muted from an 8 to 12 month perspective. Well, considering the outlook of the sector as well as the result performance of the company, the valuations appear a bit stretched from a near to medium term perspective, as well as the valuations are slightly at elevated levels. So should the stock correct from the current levels, it could give a very good opportunity for accumulation from a long term perspective. Well, that's it about the earnings review of UltraTech Cement, and for more views and updates, do log on to moneycontrol.com.